Hey everybody, good afternoon, good evening. Welcome aboard. This is ReadySetCrypto. I am Doc. You got Mav with me over there. And today is Wednesday, the 28th of September. And we got lots to talk about today. So do us a favor when you check in, go ahead and hit the thumbs up button on the video today. It helps the algorithm. It tracks a little bit better breed of viewer, put it that way. And also let us know where you're checking in from today. And then we'll get started here in just a couple of minutes. And usually the way we do these things is we'll talk about the market for a couple of minutes. We'll take your questions about the market. And then if you have any specific charts you want me to look at and opine in terms of what I'm seeing from a technical basis, then we can do that too. So get those tickers in and let me know what you're looking for. So what's happening, Mav? How are you doing out there?
Hello. Looks like people are not happy with today's title. Hey, I don't make the news. I just report it. I'm kidding. Yeah, we are in the middle of a very call it lukewarm market. I suppose it's going up and it's going down. But right now it seems to be pretty much hanging out at that 19.5 level after a lot of shorts were eaten up. Delicious. So, yeah, I think we are in that kind of like just end of summer lull, that sort of end of September heading into October, sort of like, volatility. Certainly right now, there isn't really a big major narrative surrounding crypto, at least from, a development perspective. So, of course, we go back to talking about the macro, things like inflation and the boogeyman that is the Fed. And as we're talking about today, sort of how the U.S. is getting a little bit more, call it overt, maybe declaring war, I guess, is a little bit hyperbole, but like, it is clear that the U.S. has taken a little bit more of a solidified stance, at least just moving towards it, maybe. So what we want to do is be vigilant as to what's going on, how we can be, participatory and possibly fighting back against overreach, if you will, while also just keeping ourselves, informed as to, hey, is there anything we can, positively influence or take stand against? I think there is, and so we'll get into that in a sec here. But Doc, what are you seeing before I dig into a little bit of that juicy stuff?
Everything's about currencies right now. What we've seen is a huge move in the dollar, and that's putting pressure on every risk asset out there. We're also seeing interest rates go higher. So this is the thing we've been concerned about for the last 13 years or so. Is that, everybody wants a riskless yield. They just want to be able to put their investing dollars into an asset and just have it return something. But since we went to zero interest rate policy, there's no return. So you've had to put it into risk assets like stocks, like crypto, right? So anything out there that's turning a yield, which has been, so all of a sudden that's upside down now. All of a sudden, the mortgage rates just went up to 7%. We're paying 4% on a 10-year note. So is that going to keep up with inflation? Not a chance. But still, it's all of a sudden money's being pulled out of all these risk assets. And so we've seen that going on over the course of the last 6 to 9 months or so. So it's upset so we're gonna see what, not the federal, but the central banks are looking to just put their the foot down on this stuff and continue to raise rates and inflation. So I think they've got it all wrong, and I don't think they have any kind of common sense in terms of how markets operate. So we'll get into more of that a little bit later. So we just got to get through this. At some point, we're going to flip the tables again, and risk assets are going to be under demand.
Well said. Well said. Yeah, and I think that's what we're seeing over and over again is kind of this move towards risk on, and then people getting a little bit more. Oops, that is a little bit too much screen share in there. Sorry about that. Let's try that again. Oh, all right, that's better. So yeah, it is it is a cyclical market. It is one of those things where people sort of have short-term memory loss. But I think at least for right now, yeah, we're doing what we've been doing all summer long. It is a up and down fight around BTC 20K, and I don't know. Yeah, it's the market's marginally up. There's a good amount of green on the 1 day and the 7 day performance. Cool, but that's not really news. And I think what is, as we were talking about earlier, is as Crypto Briefing is laying out, how the US is declaring war on crypto. Again, I'm not going to say that is totally accurate. I think it's just there's a constant ebb and flow between progress and, call it, process, or like regulation. And ideally, you never want to have regulations outpace innovation in any way. But at the same time, you can't have a massive breadth between the two as well. People there has to be, some basic protections in place, especially when you're considering, we're talking about people's money. And, there's, especially in the US, it's the most stringent financial laws in the land as it relates to consumer protections and things of that nature. And we go back and forth as to, is it too much? Is it too little? But basically that's in place because of what we saw with the ICO boom and bust, and, NFT rug pulls and things of that nature. Just there are, for the vast majority of people out there, the reason why crypto is sitting at 0.3% of individual wealth versus equities being at 25% is because people just feel a lot more comfortable putting, their life savings or any significant amount of capital into equities, stocks, because there's a sense that there's, if not having actual piece of the company, there are stringent regulations in place to make sure that you can't just, develop a rug pull that, or have, a Luna type event happen. And, there's pros and cons to that, having crypto be a lot more open and free in its ability to explore new avenues has allowed it to, look to the horizon and get away from just maintaining the status quo. So it's back and forth between keeping things the same and keeping, chasing what's next. But I think what the US is starting to get into, what they're ultimately going after is, some of those very suspect aspects of the crypto space, just trying to prevent, the sort of stuff. Is it a call it Trojan horse for wanting to crack down much harder on the overall crypto space and basically turn it into a mini stock market? That is possible. That is certainly what I'm sure the Fed would love to see. But yeah, it's weird. We just have to be vigilant to this stuff, because this is just like innovation, just like the crypto space. Regulations and the way regulatory bodies are interacting and interpreting crypto is always changing. And hopefully it's something that we're having a part of that conversation. It's not a one-way street. And that's what ultimately Crypto Briefing is getting at here, is that, in August, they went after Tornado Cash, basically forbidding the use of it, which is that's a big stretch from previous, stances on crypto, or how they had interacted, because to do something that's overt, I think that's where people were raising some of the alarms. And just last week, the CFTC sued a DAO for the first time. And in fact, the subpoenas were just served yesterday. And, these are steps towards, call it crackdown, call it just trying to bring crypto into the fold, however you want to interpret it. It's a little bit more aggressive than what we've seen before. And so we have to be at least aware of it, and hope, be vigilant, just make sure that who's watching the watchman, basically. Is this a move that is for the benefit or to not of the crypto space long term? Is this going to lead to overreach, basically? So that's where, as Crypto Briefing is getting into, this is starting to get into that very suspect area. And that's why they're bringing up and calling it the US's war on crypto. And I think this is also where we've seen, there's just been moves towards more and more regulation in the space, at least here in the US. because as we've seen, like with Biden's crypto order and some of the recent bills that have included language and things touching topics of crypto, it's just becoming more likely that we'll see some common sense, hopefully, regulations put in place that will help to, for example, allow something like a Bitcoin ETF to actually get approved, and for more financialization of the space to occur, for there to be more of a blending between CeFi and TradFi, just as much as we want to see a blending between CeFi and DeFi. That sort of stuff is going to happen, at its own pace regardless, but it could help to sort of eliminate some of this legal gray zone, if you will, because up to this point, actors such as the SEC have been running around doing whatever, Gensler is saying that week. And it's not always been the most well-informed positions that they've been taking. And I think a lot of that is because they're basically just the financial cops. They're the police of the financial world. And, they're left to their own devices when the laws are not well written or non-existent, if you will. So if there was more sort of clarity as to how to treat these financial instruments and how to better integrate them with legacy finance, for example, that could help, so long as it's with the intention of enabling innovation and adoption of crypto, rather than putting into a box and locking it, beneath Capitol Hill, like it's, Raiders of the Lost Ark or something. So that's what we want to see, is having a seat at this table as these bills get, considered and written. And that's what ultimately Crypto Briefing is getting at here, is that, we need to be part of this conversation. So we need to be talking to people in Congress, donating to blockchain PACs, such as the American Blockchain PAC here, or running for office, something as drastic as that, making it known that we want to have a voice at the table. We don't want to have people speak for us and misinterpret or move toward their own ulterior motives or anything like that. Crypto deserves to have representation at the table when regulatory measures are being drafted and enacted. So we should be fighting for that. We shouldn't just take a pacifist or a very passive stance on that. We need to be right there talking about it, being informed, moving for it. This is how stuff gets done. If you're not happy with the way things are or how they're going from a political sense, be loud. Don't just sit there and say harumph, end the Fed, and I'm so mad at Congress or whatever, and shake your fist at the TV and something to that effect. No, we have to be participatory and active in the political process, even if we all know that it is extremely swampy in many regards. But hey, that's why we have to be involved. That's why we can't just sit here in crypto land in our little vacuum chamber and say, well, we want this to be treated fairly, or we want this to be better integrated or whatever. All well and good to hope things, and it's all well and good to I don't know, stroll down our own imaginations, but to make that more present, to move crypto beyond what is currently in the US just 15% adoption to something much more significant. It's going to need that step. It's going to need more I guess assurances in place, or better bridges put into effect, because if people are afraid to walk over those bridges, to cross over from legacy banking into crypto, if they don't even trust the bridge itself, then why would they ever get to something like DeFi or things like that? We will never see mass adoption until it starts to better enable and enact that trust factor. So that is very important. That is going to be the defining thing, I think, in the next certainly couple of years, certainly as a part of this decade. What represents crypto maturing, being a lot more adopted and accepted, is in part having it better integrated into the existing regulatory systems, even if that does require some compromise. And I know that's not everyone's favorite topic, but that's what needs to happen, just as much as big technology advances like the merge need to happen. These are the levers of big change that we all want to see. It doesn't happen if we just kind of sit around and hope that it does. We have to be, like as much as we were actively pursuing and promoting the merge, we have to be, like there has to be a merge between TradFi and CeFi, right? Like we have to be promoting that. So anyways, hopefully that gives some context to today's title for the stream, and hopefully you're a little bit more informed as to what's going on. Honestly, just keep yourself involved. Just keep checking up on this stuff, because otherwise, like we definitely do not want the space to just be one way regulated and have no say in it. I think that would be a shame, and we can do better. So yeah, that's all I've got for today. Doc, what is your perspective on all that and like what's going on in the markets?
If we want crypto adoption, probably the fastest way to get it is to ask your favorite congressman for their public key. And
there we go.
you will see, what's the expression? Assholes and elbows after that point. Oh, let me get that right to you. All of a sudden, magically, we get adoption. All right, let's take a look here at what's happening with the charts. Let's see if we can get some chart action going here. All right, so this is the U.S. dollar, and this thing has been screaming higher over the course of the last couple of weeks. Actually, this has been going on for months. Now, really, it's broken out since the March-April timeframe, and that's right around when everything was getting crushed. So it's good to see today that we have a reversal candle. We have a higher high and a much lower low so far looking at the close for this. Because as you guys know, I mean, just to put some, so if you want to trade BTC versus, say, the US dollar, what happens when the US dollar keeps going this way, right? So when you do that, when you trade the BTC versus the US dollar, essentially what you're doing is you're going long Bitcoin and you're going short on the US dollar. Now, what happens if you're going short on the US dollar while it's doing this? Well, you're not going to be happy about that. And so it's kind of amazing, actually, that Bitcoin has held its ground close to 20,000 for all this time while this has been going on. So we want this actually to start coming down. And once it starts coming down, we're going to see assets, risk assets like what we trade is going to help. So also what you got to keep an eye on is the whatever rate that you want to view. I usually use the 10-year note as kind of a proxy for the bond market. Watch out for this, because this has gone ballistic. And this is it's gotten up to 4% in terms of the 10-year note. But if we start to see the 10-year note doing this, that's good in a way, because that's going to bring things down. However, what this also means is that this is the bond market pricing in a potential recession, or worse than that, maybe even a depression if it starts getting into what it views as deflation. So keep your eye on this. So I'll keep reminding you guys of this every week, of some of the bigger things. Now, go figure that XRP has been the number one asset here lately over the last couple of weeks. It's pulling back a little bit, but so far is above our buy point. And with that, I'm going to go over to some of the coins that you guys are looking for here. I have not tried to find some of these. Let's see if we can chart them. Okay, so VeChain, VET versus Ethereum. Let's see if we can do this. VeChain versus Ethereum. What do we got? Okay, so this is obviously this is a big descending pattern. What I would look for at some point here, let's see who was asking for this. This is Hawkeye. Okay, so Hawkeye is asking for this. So these are just lower highs and lower lows, lower highs and lower lows. So this is a downtrend. But what will change this is some form of either a combination of a higher low, higher high combination, or we could see this thing, just continue to burst forth into a new high, in which case the next low should be a higher low and then a higher high. So I would wait until you start seeing that. You can really wait until you get above, in this case, this is 1900 versus Ethereum. So watch for that. And if you're not long already, I would wait until you get to that level before I would take any kind of long position. Okay, the next one that Hawkeye was asking for is Mover versus Ethereum. Let's see if I can do this here. Moon River versus Ethereum. This is a particularly depressing chart. I see no reason why you should, like, again, guys, I want you to buy assets that are heading higher in price. Stay away from something heading lower because we don't know where the bottom is. What is low can go lower. And so you got to keep reminding yourself of that and not just chase after the bottom here. Don't, stay out of the gutter. So I would say wait until this thing starts to base out. It showed no tendency to base out right now. So wait until this consolidates or at least gets above the 200. That is a simple filter, the 200-day moving average. Okay, so next one I've got here is EWT, and we'll just do this versus the US dollar. This is, and I've forgotten what this asset is called, but this is showing a little bit of potential for this to break. But so far, if we go out to the larger time frame chart, this is just a weekly lower high. That's all this is so far. So for this to get somewhere, this needs to put its foot in the ground with a higher low and then drive into a higher high. So again, I would not touch this one unless it gets above 550 after a pullback. So right now, pullback after 550. That's we're above the 200. We're getting a golden cross here. So this is potentially getting somewhere, but I would say above 5 or 550 would be on good volume. And we're starting to see good volume coming into this. This is what's driving this move. So don't chase it down because this could be just another lower high on the weekly chart. However, take the breakout if you get something above 5 or 550. Okay, so that was Ashbodge and Steph as well too. Let's see, Hawkeye, you like VeChain versus Ethereum on the weekly. Let me go back to that one just for a second. On the weekly, on the weekly, well, I don't like this on the weekly because it doesn't look any better at this point. So unless it's able to get above 1900, I still don't like it. Okay, let's see. I got a couple of other ones here. The JCADA, Cardano. Let's see if I can find Cardano here. Where is this? There we go. Cardano on the weekly chart is starting to consolidate. It's starting to base out. You can start to see that base building here. And that's why I have the red arrow. I want to take the breakout above that level. Take the breakout above that level where the base is going to be building out. Let it just beat itself to a pulp down here. And when nobody wants to buy the breakout is the right time to do it. Markets will punish those that take the longs until at some point nobody wants to take that anymore, and away it goes. So that's what I'm looking for here. GLMR. Okay, another pretty brutal chart, and I'm not really seeing any basing right now. I mean, this still continues lower. If you want a better perspective, go out to the weekly chart, and you can see what's going on here. It's trying to find some support right now, but it's not doing it very quickly. There's no rush to get into this one, I would say, for GLMR. Okay, Chainlink. The mighty Chainlink is actually a pretty good looking, we got a pretty good looking base here. And if you're not long already, I would wait until it gets above 950. It's been basing out, and this is pretty typical to do one of these long extended bases. It's almost like a big saucer, right? And then as it breaks out, all of a sudden it's got all this power. This is just winding up the spring like crazy until you can't hold it anymore, and boom, this thing will come out of here at the slightest excuse. So I would Wait until it gets above 950 on good volume. We're starting to get some volume coming in. But right now, stay away from this because you're just going to beat yourself to a pulp going back and forth. Okay, let's see. A couple more, and then we'll wrap up for today because I think both of us have a beer with our name on it. All right, let's go Nexo. I have not looked at this one like forever. Okay, so once again, we're seeing a base. Once again, we're seeing a base about 1.22, 1.25 or so. Wait for the base to set up. Wait for the volume to come in. I don't see a reason to chase after this one just yet. KDA versus US Tether. Okay, we have another one with setting up a base here. I would say wait until you get above 2.5. You can start to see the 200-day moving average is just now picking up. This thing has only been alive for about 205 days. So I would wait until you get above 2.5. 2.5 would be where I'd be. Okay, so PD's looking for Hex. Hex at times has been like a phenomenally great chart, and then it dies. And right now it's in the death part of it. It was doing so well back here and has been doing so poorly for so long. So I would let it wring itself out. I don't see any reason to chase after this one at this point. The base is not even building up right now on Hex, unfortunately. Okay, last one for tonight is TRAC. TRAC versus US dollar. Origin Trail. Origin Trail is a brutal chart. And if you can't get a beat on something, sometimes go out to the weekly chart and then it becomes a lot more obvious. We don't really have any support. We don't have anything heading higher at this point. And again, one of the cheat codes that you guys can use for these is if you just go out to Hike and Ashy Candles. So just go out to Hike and Ashy Candles on the weekly chart and wait till they start turning green. Maybe a couple of green candles in a row on the weekly chart. And then that will save you all of this pain to the downside. Buy assets that are going higher in price. It's really that simple. We just lose the patience, right? We lose the patience to do so, and there's sort of this rash of bad advice like buy on the way down, buy on the way down, buy on the way down. Year and a half later, keep buying on the way down. After a while, it takes you a lot because your cost basis is so high unless you're able to get something on the way down. Now, DCA, you can DCA, but I would DCA only if you've got a super long time horizon for something like this, maybe 10 years, 15, 20 years, something like that. Then, you'll be glad that you added on the way down. That's fine. But as long as you have a long time horizon. Most people don't. Most people say, yeah, I was DCA, but now what do I do? Because, this portfolio is just in a world of crap right now. What do I do with this thing? Well, you have to have a longer time horizon. You have to figure out whether you're a trader or you're an investor. Never the two. You can have different piles of your portfolio with different perspectives on it. You can do long-term DCA with your long-term money and then find some short-term money. Maybe it's usually smaller, and that's where you do your active trading. Okay, that's all we got. Mav, what you got? Anything came in over the wire that's directed to you?
Yeah, just I think Doc's right on the money there. It is it's pretty clear that it is going to be a painful market right now, especially to be in like high risk alts. So I would definitely consolidate your interests and your consideration to sort of the large caps, if not just BTC and Ethereum. Yeah, I think right now it's kind of the market is back to being scared of the boogeyman that is the Fed, and somehow inflation is surprising, or it's back to being sort of the recurring thing that we sort of forget about it for like a week or two, and then oh no, it's a surprise again, and here we go again. It's we're we're in that perpetual roller coaster, but I think eventually the market is going to start getting a little bit more active, especially towards the end of the year. We're finally into the last quarter of this crazy, I don't want to say catastrophic, but certainly is a, I don't know, just it's one of those years that you just kind of have to grin and bear it. what we're going to be talking about in the Omnia newsletter tonight is is this the Fed's intention to cause more of this pain? Do they want a recession, basically? And yeah, getting into some of the data around what they've been getting up to and how successful it's been, where I think it's going as a result. So if that's at all interesting, links down in the bio below. But we also have some free materials and communities for you to join as well. If you haven't done so already, which are active, and we continue to post to and provide great resources and information. So definitely make use of that. Make sure that you're going into this last quarter of this crazy 2022 as informed as possible, finishing out the year. Yeah, I want to say strong, but as well informed and well positioned as you can be, so that the moment the market starts to move in a direction you want it to, you're better able to make and take advantage of that. So yeah, I think we're just, as we talked about when this month started, September, October is generally one of the harder months to get through for crypto, especially, but markets especially too, just broadly speaking. So I think hopefully we'll see something that catalyzes the market, up or down, but enough that we can get the last of the tourists out, and we can start to talk about what is going to be the thing that starts to move crypto back up. Is it going to be the hedge against the status quo, the race to the bottom monetary policy that we're seeing right now? As we talked about in the Omnia newsletter yesterday, the British pound is now toilet paper money. So it is it's very, very quickly becoming the case that fiat ain't what it used to be, even a couple of years ago, comparatively. So yeah, it is a market. It is a system that is in flux, and I think the best we can do is be as informed as possible. So if that's at all your intention, you're in the right place. And thank you so much for spending some time with us today. We will be back in the same place next week, same time. But until then, hope you're doing well out there, and we'll see you then. But Doc, you got anything else?
It may be you by yourself next week, because I'm going to be.
That's right.
I'm going to be traveling to.
He's already ready. He's got his shirt.
Yeah, I'm heading to the Bahamas. So Bahama Mama, man.
He's going to go fist fight some hurricanes. We'll see if he does well with that. Cool. Well, thanks so much for hanging out with us, guys. We'll see you next time.
Thanks, everybody. You have a good night. Have a good week. We'll see you soon. Bye now.